Hello, everybody. Thanks for joining us on our YouTube page. Hey, I wanted to have a quick conversation about inflation and retirement. This is obviously a very hot topic right now. It's the headlines of most of the news these days. And I've had a lot of conversations with clients and everybody else about, you know, one, first of all, this is just the news of the moment. I mean, it's kind of overtaken any wars going on. It's kind of overtaken a lot of things, and there's a lot of blame being thrown around. And so this isn't about getting political. This is about understanding what it is that we're going through. And I think we're going to see some significant changes in these inflation numbers in the months and years to come. Last I heard, we were hitting 9% inflation for the year. But I think some of this conversation has to revolve around what type of inflation is this, and is it here to stay? One of the things that I don't think people are talking about enough is this more of a supply and demand issue? We saw everybody freak out in the early part of the pandemic, but then some crazy thing happened and consumerism just exploded. Pricing of houses, people were buying and buying and buying. People were buying stuff. And we had a supply chain issue that compounded this problem. And now we have a supply chain issue when it comes to oil and gas. So if we really look at what's going on out there, we might realize that a big part of this is more of a supply chain issue. And we're hearing more and more and more reports of warehouses filling up with stuff. We have a huge glut of supply of a lot of things out there now. Wood prices that had been going up and up and up for about a decade now are coming down all year. The wood prices have been coming down. I walked through Home Depot the other day. I could barely get through the aisles because they have now filled up the center of those big aisles that they have with stuff. Intel and AMD, the chip makers for computers, are warning that there is an absolute silence. There's crickets chirping in terms of the buying of computer market. So the supply is now exceeding the demand, and we might start seeing the results of that. So keep in mind that inflation comes in a lot of different ways, and this just has this weird feeling of a different type of inflation. This might be, at least in some cases, quite temporary. You look at a lot of the staple goods, and we haven't seen any skyrocketing in prices. We've seen a little bit of adjustment for things like milk and all those base necessities just because of the gas being so expensive. But understand, a lot of the other stuff that we've seen inflation on has been really compounded by the supply and demand issue and the supply chain issues that we've had. But that being said, inflation fears are real. We understand that inflation needs to be addressed in retirement. And I think it's always important to take a step back and realize that, believe it or not, even though most retirees' income is pretty flat, they're very sheltered from retirement when they've entered retirement properly. So some of the things that we talk about in terms of leading into retirement, one of your biggest priorities before you go into retirement is owning a home, owning the shelter over your head, because you look at the cost of things out there, and the things that have rose the most in cost are housing. The price of houses and the rents that people are paying are both really high right now. Well, if you own a house free and clear and you're faced with buying a house, you can sell one with this bloated price that we have out there and buy another house. So you're sheltered from that, and with pun intended. So owning your home in retirement is a great inflation hedge. Okay, that's the housing costs are one of the big fears. If milk doubles in cost, that doesn't ruin your retirement, but if you're renting and rent doubles in cost, that's a really scary proposition. Okay, so selling and buying fixes the problem of the inflated house prices. If you have to have a mortgage, make sure it's a fixed interest rate, or maybe consider that reverse mortgage out there. Okay. So the second thing that helps you understand inflation in retirement is the fatherly, motherly advice of you got to assess your wants versus your needs, especially in times right now where a lot of stuff that we have to buy out there or want to buy out there is inflated in price. And if it is a supply and demand issue, then it's artificially inflated in price. And instead of buying that TV today, you might want to wait a few months and buy a TV. Instead of buying that car right now, you might want to wait a few months. So understand that the want versus needs, the base expenses. If you do some good research on the pricing of the needs, the base expenses out there, they have not really skewed a huge amount. You won't see that 9% inflation in those base expenses. There's anomalies here and there that had supply chain issues that skyrocketed in price. But when you look at goods and services, especially on the want side, we see a lot of that artificial inflation. And it's a lot of, we can charge whatever we want because people were paying it. And all of a sudden, consumerism has slowed down significantly. Supply and demand is getting fixed, and we might see a lot of these prices start coming down. So to shelter yourself in retirement, we're adults. We know the difference between wants and needs. If we have plenty of money and our wants are more expensive right now, but we don't really care, wonderful. Enjoy your retirement. Go do what you want to do. Go buy what you want to buy. But understand, if your finances are a little tighter, we do need to keep an eye on those wants and needs. That helps us shelter from these inflationary storms that we're seeing. The other side of that is very similar to the want versus need. It's this or that. Okay, so here's somebody who's faced with maybe going out to dinner tonight. Okay, I was faced with booking a restaurant for a somewhat business meeting, and I looked around and I could not believe the prices at some of these high-end steakhouses and how many choices there are for high-end steakhouses. I'm not joking. The minimum steak price at these places are $60. I couldn't believe it. I mean, every one of them had steaks that were well over $100 for one steak. There was an appetizer that was $200 per person. Seriously, I was shocked. I couldn't believe at the amount of money people were just throwing around at these restaurants because they're all full. So it's pretty amazing. So when I talk about this versus that, okay, well, you got the high-end steakhouse choice, but you also have, say, maybe an Outback Steakhouse or, fast food. We have choices. And when things are going crazy like this, we can choose to scale back a little bit. Okay, I ran Outback Steakhouses. I love the steaks there. And to be real honest, I'd rather spend $15 for a steak at Outback Steakhouse than $50, $60 at these high-end steakhouses, to be real honest. It's not that I can't afford it. It's that really, it seems like a waste of money sometimes. So we do have to also think about that, this versus that. This works on travel too. I actually had a business conference in Portugal. And the funny thing I realized very quickly was it's expensive and difficult to fly there. Okay, so the flights themselves seem to be a little bloated in price right now. But once I got there, gas was really expensive, $8 a gallon. It's not just the US that's having problems right now. Trust me, it's all over the world. They're also having employee issues all over the world. There's not enough employees to work out there. So, but the other thing I noticed in Portugal is everything else was super cheap, actually. Meals were cheap, all the other stuff was very cheap in Portugal, but it was expensive to get there. So maybe find someplace that's a little less expensive. A year or so ago, I found this neat little area in Mexico called Holbox, Mexico. It's a direct flight from Arizona to Cancun, and that's about a 2-hour drive to this neat little island that you got to take a ferry to. It's super cheap, and flights to Cancun are super cheap. So there are other ways to travel. I'm not saying don't travel. I'm saying shop around a little bit, get creative, and we call it coupon clipping. Even when it comes to the cruises and other stuff out there, there's lots of deals to be had out there. So we do have to make sure that we're paying attention to that during inflationary times. Again, these are for people that are concerned about that effect on their finances. There's plenty of people that have plenty of money that don't have to worry about this stuff. Okay. And then the other side of this is, instead of sitting on tons of cash, because I know people are scared of the stock market right now. I know that we've been pushed into a much more conservative stance with all the craziness that's going on out there. But please be careful about the amount of cash that we're sitting on. Okay. I've always preached you should have 1 year's worth of fun money that your income doesn't cover, and a little cushion for emergencies, realistic cushion for emergencies. And then we can look at our savings to, our invested savings to refill that bank account each year. It's much more efficient that way. Instead of pulling monthly out of your investments, make one wise decision each year to refill that bank account for your upcoming year's needs. Okay. These are all things that really help you when it comes to inflation and your situation in retirement. The other side of this is the safe investment conversation that has been honestly something I've been screaming for over 10 years now. Since interest rates plummeted back in the 2008 crash, bonds have not been worth being in. They're in a very difficult position, and retirees should have never been in bonds. We have to understand bonds. It's a teeter-totter, okay? When the United States raises interest rates like they are right now, they do it in the name of combating inflation. Okay, you look back at the 70s, we were combating inflation and they were kept rising interest rates. The whole idea is so maybe things like your bank accounts and your safer investments start paying you more interest to help you combat that inflation in retirement. Well, the reality is that if you own a bond portfolio and interest rates have been going down for 30 years, the value of your bonds that you own are at the highest level ever. When interest rates hit zero, they can't go any higher. And if you have an investment that's not allowed to go any higher, or is relatively at the highest point it's ever allowed to be, then the only direction you have to go is down. And that's the biggest problem when owning bonds, okay? Especially bond mutual funds, because you have a price of a bond mutual fund that represents the value of a portfolio. So if interest rates rise and all the portfolio's value is devalued because interest rates are rising, then that price is really good at going down. Okay. If you own individual bonds, then you have a liquidity issue, because if you try to go sell them now, then you're perceivably going to lose money because you have to take the market price for that value of that bond. So it's always been a bad idea, at least for the last 2 decades. It's been a bad idea. Even you could argue past 9/11 when interest rates came down. Our Fed chair brought interest rates down and left them way down very low for a very long time after 9/11. So we do have to recognize that bonds are flawed for retirees. They are terrible. They're anti-inflation hedges, okay? As inflation rises, interest rates are pushed upward, which means the value of your bonds go down, which means your safe investments are now losing money. So, okay, you made the mistake, you've got the issues in your portfolio, but that doesn't mean that your choices going forward are staying there until hopefully they come back. You're telling me that interest rates are going to come back down. Well, if things break, if the stock market crashes and the financial system falls apart, then yeah, certainly interest rates are going to come back down. And there are some arguments that our Fed chairs are going to keep pushing until it breaks. We have had a tendency to do that in the past. So we do need to be careful with bonds. We do need to understand that if you're trying to protect yourself against inflation, we need to have better safe investments, okay? So not everybody needs safe investments. Not everybody needs to pull money from their portfolio. So whenever that question comes up, do you need safe investments? It's either because you're risk adverse or because you actually need money from your portfolio. Those are the only two people that need safe investments, okay? So then the other question is, what part of your portfolio? My example I always use is your IRA. Look, once you retire, the crosshairs are on that IRA. You haven't paid taxes on that money and the IRS wants it, okay? We want that tax money. You got to pay your fair share. So we know that we're going to have to pull from there every year for the rest of your life, whether it's wise tax decisions before your required distribution or after your required distribution, you're going to be forced to pull money from there. Okay. Now, if you're lucky enough to have no need for any of that required distribution and we're just reinvesting it, you don't need safe investments. But if you're going to pull that and actually use it for yourself, then yes, we need safe investments. Any part of your portfolio that you intend on actually withdrawing money more than, say, maybe 2%, then we need safe investments. Okay. So where will you pull from when the market's down? That is the question. The number one thing, and I have a video on this on the YouTube page as well, the number one thing in retirement that your portfolio should be designed to avoid is pulling from an investment that has lost. Mathematically, that's how you're going to destroy your portfolio. Never find yourself in a situation where you have to pull from losses, okay? And that's why also pulling once a year is more efficient, because you don't want to be faced with every single month looking through your portfolio trying to find the place to pull from, because inevitably you get angry with an investment that's not doing well and you choose to pull from there, and that means you constantly are pulling from losses. And mathematically, that is a horrific decision. Please don't do that, okay? So we need real safe investments that we can pull from when the stock market is down. The problem we have right now is the stock market's down and your bonds are down, because bonds are correlated to interest rates. And if interest rates rise, the value of those bonds go down. That's why we have this little teeter-totter here to help people understand that. I've been screaming that since 2008. I probably should have been screaming it since 9/11 when interest rates came down, but I have been screaming it. You go back and look at any of my education. I've been trying to make people understand that bonds in a retiree's portfolio are very flawed. Bond mutual funds are liquid. You can buy and sell easily, but they are extremely sensitive to interest rate changes. And if we see inflation, interest rates go up, and boom, you lose money in your safe portfolio. We don't ever want a retiree in a position of losing money in their safe portfolio when we're seeing inflation. That is wrong. That is not how you invest responsibly, okay? So that is the major flaw. Now, when we talk about buying individual bonds, then we have a liquidity issue. If you have to sell an individual bond, you have to sell it at market prices. If interest rates rise, you're going to get less for that. You're going to lose money, okay? So some people that don't need their money but still want safe investments, individual bonds might be okay. And it's been, a pretty good time to actually buy them right now, because you can get 4% on a 30-year bond. But I will assure you, there are much better alternatives than a 30-year bond paying 4%, okay? There's plenty of other choices. I can show you risk-free, fee-free at 4% very easily out there, all right? So hopefully that puts some of your minds at ease and helps you kind of understand that retirees, more than younger people, can shelter inflation a little better, believe it or not. Even if you have that stagnant income, if you're positioned properly in retirement, you're doing all the right things to shelter yourself from some of this inflation. Whereas younger people, we're not seeing those wages rise as much, especially now that employee shortages are starting to calm down a little bit because supply and demand is getting fixed, okay? There's less demand, there's too much supply, we can start slowing down. There's actually a lot of companies, a lot of big companies that are starting to lay off employees, seeing this coming. So understand that some of this craziness we're seeing out there might be temporary, and we might now start teetering the other way. And those of you that bought a whole bunch of those tips, these Treasury inflation protected, please know that if we have deflationary numbers, you will lose money in there. So it's nice that risk-free making 7, 8, 9%, but all of a sudden, if the supply chain is fixed, if the supply versus demand is fixed, we might see a lot of those pricing come back down. Okay, if the gas crisis, the oil crisis starts settling down, we might actually see deflation again. Last time we saw deflation was 2008. That was a bubble that burst. Think of bankruptcy as a very deflationary event. And yes, those treasury inflation protected securities do actually pay negative interest, effectively losing money out of your portfolio. So be careful about those. Also, if you own them in ETF and mutual fund form, treasuries in those forms, it's the same as bonds. As interest rates rise, the values of those investments go down. So be careful about those interest-bearing investments. That's it for today. Please let us know if we can help out in any way. We've got our email on the screen, our phone number. You can contact us anyway. But if you enjoyed this, please look below, click the like button, share it with friends, and please subscribe below. That's what makes this YouTube page work. Hit subscribe. We're going to upload lots of new stuff every single week and continue the wonderful education and timely information via the YouTube page. Again, thank you so much for joining us and hope to see you soon.